All right, so I'm here with Jay Berg. Um, Thank you so much for doing this. I really appreciate it on short notice and everything. And yeah, I guess I would just say from my understanding, even though I haven't known about you for very long, basically just I found you a week ago, and I was just interested in hearing from someone who's been in the tech industry and with it in the vertical of trading assets, pivoting into crypto and Bitcoin. So maybe you could tell us about where you started, your humble beginnings, and then we can go from there once we hit Bitcoin.
Yeah, for sure. Thank you, William. I'm happy to be here. It's been a long road for me in crypto. So where did it begin? So I kind of grew up in a world of financial markets and hedge funds. Back, let's just say, starting from like 1987, stock market crash. That was my first introduction. But like starting like 93, so my dad was a big hedge fund guy, Milton Berg, and he worked with Stanley Druckenmiller. So I really was trying to predict the markets, and I also got my first computer. So I wrote my first program to, um, a simple strategy to predict the stock market. When it goes up 10%, you buy. When it goes down 10%, you sell. So, that was in the 90s. And although I really wanted to be like a Wall Street guy, I ended up being a really good coder. So that like became my career path. So I was like the Wall Street coder guy. So I almost feel like I was in crypto like from 10 years before Bitcoin. So, I was doing the charting, doing the coding, doing the trading, the degenerate gambling. But really, I was a computer programmer, and I was pretty good. And the thing was that these banks and these funds and these places I worked, I mean, besides like I worked for Bloomberg, but some of these other places I worked, the coders weren't really like elevated, and the design of the systems and what we were told to do was so insane. Um, you know, so when I actually read the Bitcoin white paper, I was like, it was an aha moment. I was just coming off like doing like high frequency coding at Fortress. And I was like, this is like the first time, like a software developer, like a piece of code can actually end to end without like a business model, without a manager, without a design team, could actually like create something out of nothing. That was let's see, 2010, I would say. So I was immediately like almost immediately all in. And from the beginning, I saw like, pushback from like regular people. Like actually, like the first time I saw the word Bitcoin, it was on a closed thread for overclock. I think it was overclocker.net. I was trying to overclock my machine, and people were talking about mining. So yeah, and then I found that the source code, and back then it was really like a computer programmer software thing, a very nerdy thing. But coming from financial markets, I quickly realized that as more and more people get introduced to this, um, it's it will take off. I was like, it's maybe even, and one of my first posts was it may even hit $100 or maybe $1,000. And yeah, so it was a revelation, and that was the beginning of my journey.
That's awesome. So coming from that background of traditional trading, what made you think that pivoting to Bitcoin and going all in on Bitcoin was the right decision? Because, people argued that it was too slow, and then there were scaling wars. Um, and like you said, it was a interesting um, it was an interesting protocol because it was truly peer to peer. and didn't have any middlemen involved in it. So was that what attracted you to it, or were there different things?
Yeah, so I do recall in like maybe 1998, 1999, thinking maybe once or twice, because there were a couple of startups that were doing decentralized money. And immediately you just think it through and you're like, oh, that's impossible because of double spends. Like how how does everyone know, you spend the money twice? It's impossible. So that was like the one thought I had. And then when I read the white paper, I was like, wow, it's an actual solution. So I got it right away. Now the period of time between 2010 and 2013 and 14 was actually perfect. Like Bitcoin worked perfectly. It was completely decentralized before ASICs, people mining on their computers. So everything about the protocol was working great. There were no issues, right? And not only that, we believe that we're in charge now. Like the legitimate developers developing things correctly. And we, of course, there's a bunch of questions. One of my first questions was unit of account. Like how would anyone start using this currency if their expenses are in dollars, right? That was like the big question I had. But we believe that, you know, Satoshi was like was a coder. He was he was a little brazen in a sense. Like he said things like, um, if you don't believe me, if you don't believe me, I have no time for you. Something like one of those quotes, right? And it was always about, hey, there's like top of the line software engineers, scientists, and this is a breakthrough, and we're gonna take it from there. Um, and that was the idea, and it was going great. So a lot of how I feel about Bitcoin comes from those days. Um, and obviously everything changed. Starting with ASICs, that was like a big one when mining became not as decentralized. And then the first fork, I think Ethereum Cash, Ethereum Classic, right? And then and then the scaling wars. Um, that was big too. I was on the side of the UASF. So what I do from my days of markets, I'm very pragmatic and practical, and I'm able to predict. I like to use reality and to predict the future. So I use like markets, numbers to say what, and then if something's off, I try to figure out what it is that I don't understand and deduce it backwards. Um, so like I may have like strong opinions about things, but I realize throughout the years that sometimes things happen in weird ways. And I like to think of like JavaScript. The JavaScript when it first came out was like a disaster. It was a joke. It was a piece of crap. Like no one, it was like not serious. It was ridiculous. And I don't know, 20 years later, maybe 10 years later, V8, everyone started using it. Then the V8 engine came out. And now it became this thing that's actually good and usable and all that. So things change, even though like the underlying technology may not be, as good as, the perfect design.
Mm. Yeah, so there was a lot of attempts to progress the chain forward, and you were on the side of the hard fork for Bitcoin increasing blocks or no?
Well, I was on the so I actually I was on the side of BTC USD of BTC. Um, However, I was not on the side of the small blockers. So I believe a lot of things that happen in the space is memes and lowest common denominator things are assigned things, right? I was on the side of Bitcoin Core during the Civil War because um, it wasn't about block size. Actually, we the consensus was a lot of things I say are can be taken out of context, but the consensus was larger blocks. Of course, we're going to have larger blocks. You can't force it on us, right? And it was about firing core and using this new it was just like who's going to run this thing, right? So it was kind of like that story that I was on. So I actually don't even like the term small blocker at all. I think it's terrible. Of course, you know, actually SegWit was a block size increase. Um, Literally, it was the maximum we could go, and the plan was to go more. Um, but that was, that's so long ago in the history. A lot has changed since then. Um, I do believe that if Bitcoin Cash never forked off, we would be in a much better place today. I think the community became very rigid and hard into these, things that they fought a war over. And it turned into something that, I don't want to say like get into all that, but it's not scaling the way it should have been. Um, and I could even go as far as to say that um, I could go as far as to say crypto is scaling Bitcoin in a sense, right? But I won't go as far as to say that there's from a financial, so my trading background and a financial and practical background, I'm going to be on the side of the coin that wins in the price, right? So I put aside my like scientific problems with Bitcoin, and of course there are a lot of other better solutions, but um, it's when it comes to money, right? When it comes to making money out of thin air, you really could only do it once. So, because how is it, how could you say that there's a limited supply? I believe like when I used to talk to like people back in the early days, like normies, they'd be like, anyone could just clone the code and make a new coin. So how's it limited? And I'm like, exactly. It's only limited if you just stick with the first one forever. So that's the reason why I think um you know Bitcoin so this there was a whole path. Bitcoin was supposed to be improved and all these new technologies were supposed to be merged into Bitcoin and we were supposed to scale. Um and due to human the flaws of humanity, right? Um it turned out that we were no longer in charge. So the real scientists were no longer in charge and I did see Bitcoin opening up computer science to the masses, but what I didn't see was the masses picking up parts of it, having a logical understanding of it, but not seeing that unless they actually do it and code it and run it, that they're missing something and they should defer to those that are actually, you know, capable. I used to say, like, if you're not capable of coding Bitcoin, then you should like defer to the people that are, you know. So that was a big change since 2014. Again, a lot of my comes from those days. That and then the ASICs, right? So a lot of my opinions about Bitcoin has to do with the assumption that the distribution of SHA-256 hash rate is distributed amongst the humans, right? Like we kind of don't even talk about it anymore that there are 7 mining pools, right? So in a world where there are 7, in the world of 2024, it's a completely different world today. Um, but the core of those coins from 2008 to 2012, 2014 are still like embedded into Bitcoin. And I believe that um, Bitcoin is like so right now, I would say Bitcoin is the default currency for the crypto industry, right? So Bitcoin is the alpha. When I say alpha, I mean in financial terms, right? Um, and what's the fastest way into Bitcoin? I actually tweeted that the other day. Like, if an alien came down and said, if you ask them what is like who, what's the fastest way into Bitcoin, it would be Ethereum. So an Ethereum holder could instantly swap to Bitcoin faster than almost anyone else. Why? Because it's the same ECDSA, right? It's the most liquid alternative to Bitcoin, right? So what does that mean? That means that crypto's kind of scaling Bitcoin, right? Like, I don't even understand why you would rather have dollars than a crypto if there's a liquid financial market to swap it. Like, even if you believe Bitcoin only, if there's a liquid financial market to swap into Bitcoin and it's the same cryptographic curve, I would say a Bitcoin maxi should want to be holding Ethereum instead of dollars, right? So you can't really say that, but like that should be reality. But what happened with the tribalism and all that, it became something else, and it's a shame. And but anyway, I don't want to be a downer. I think I have a lot of positive things to say as well.
Yeah, no, I mean, like, I think it's an inherently positive comment to especially not be um a maximalist or a tribalist in the sense of only sticking to one chain. And love the I love the explanation that crypto is scaling Bitcoin because I remember um I do remember a comment that Vitalik made about this, which was there are different ways to scaling a blockchain. And one of those ways is just making more blockchains until it can
Right.
handle the throughput. And yeah, I pretty much agree that you know, e- Ethereum is basically a gateway to Bitcoin. And yeah, this maximalism has always struck me as really toxic, and I don't I try to understand where it comes from. It seems like people are extremely loyal to certain blockchains.
Yeah, I saw where it came from. The thing is that the group of people that are the most toxic change every iteration. So those people that you're fighting with are about to, like, in 18 months they're going to be completely changed, but there'll be a new group, right? So you have to just understand that and not engage. um Having said everything I just said about Ethereum, like, it's fun, like, just like JavaScript, Ethereum was fundamentally flawed from day one. How I felt, like, just as strong as I did. And that's I actually spent, since 21, when Ethereum came out 2014, there were tons and tons of, like, coins and research and all different stuff. Like, they even say in the space, anything that comes out, any innovation that happens has already been done in 2014, 2013, right? So when Ethereum came out, we were like, I mean, are you serious? We're going to throw a Turing complete virtual machine on top of blockchain? Like, it's just doesn't make any sense, right? Um, but it took off, right? And it now that now that there's so much use to it, it has other utility than what it was designed for, in a sense. But you know, I'm all about the game theory. I think Bitcoin works because of game theory. I think you don't know, even Satoshi didn't know it was going to work until he saw it working, right? Um, and I think that's the game theory is broken on, let's just say, modular Turing complete blockchain. I think that was a mistake, and it's in my white paper. The abstraction from Bitcoin into blockchain was a mistake, and that's one of the reasons why I'm talking to you guys, because you guys are the UTXO guys, right?
Yeah, that's right. Um, not a not a maxi in any sense. I am definitely okay with experimenting, but from what I've seen and what I've experienced, it seems like UTXOs are a very nice way of having good security and an interesting inherent sense of parallelism.
Parallelism, exactly. So UTXO blockchains and Bitcoin in particular was designed by Satoshi and for a particular use case, right? Of peer-to-peer electronic cash. What that means is that peer-to-peer electronic cash, I'm sending you money. So the ordering of events within the block is doesn't matter. And the the double spends are mutually exclusive, right? You can't have both of them in the block, makes the block invalid. So only one of them is valid. Um, with Turing complete virtual machines, um, you have multi-party games for money, and the front running, you know, is turns out the security of mining for proof of work does not solve blockchain. It does not solve front running. It actually makes it broken. And so there's a subset of another reason why NFTs, the reason why NFTs are so big, because NFTs are the other extreme. NFTs don't even have double spend risk. NFTs are easier, is it's overly secure to do NFTs on a blockchain, right? So it's there's no double spend risk. It's not money. It's one of one, right? So um, that's why it's actually thriving because it's extra secure. You don't actually need, proof of work really for NFTs. And then the other extreme is like, let's take a game of rock paper scissors, electronic game of rock paper scissors for money. Like if you were designing an electronic game of rock paper scissors for money, you wouldn't make it transparent completely because everybody could see everyone's move, and you have the speed of light. So if I do scissors and I think that this is blockchain, it's secure, but everyone sees it, and anyone could play against me, and they're gonna do, how do you beat scissors? Rock. They're gonna do rock, and I lose every time, right? So, and then the worst part is the miner gets, if the miner sees this and picks up on it, right, and you don't know any better, you end up losing all the time, right? And why? Because the security of this game has, it's orthogonal to the design of Bitcoin, of blockchain. So that's what, like, you know, so coming from financial markets, coming from high frequency trading, understanding. So I was from the beginning at Bloomberg all the way to Fortress, and I saw all of a sudden, technology, finance started merging, and what became like a person to person, trading hits thing turned into this insane amount of money going into speed of light and mechanisms to like earn pennies over and over again, right? And I saw the amount of, like, tremendous amount of like effort and money and science went into you know finding these little, yeah, inefficiencies, not just inefficiencies, but like the Byzantine generals problem, actually, because it's the speed of light all over again. We think computers are synchronous, but they're completely asynchronous, and nobody really knows what's happening, right? And that's the reason why you have central authority. Like the reason why governments exist is because humans couldn't communicate across place. If everyone was in the same room, you didn't need governments. You don't need centralization. Um, so the point is that I saw when I saw Ethereum, I'm like, I mean, this is crazy. Like, if you think what just happened in Wall Street was crazy, HFT, what's about to happen? If I mean, I said to myself, I'm like, no one's gonna ever use it because it's obviously broken, right? Why would you play a game where the poker cards could be seen by some of the people? Um, so that's kind of like what do they call that now? MEV or MEV, right? Um, so that's kind of like how I started thinking about this problem when Ethereum first came out, actually beforehand. And now, like, I kind of by trying to solve that problem, um, I kind of have a new, I don't even want to, it's not a blockchain. It's it's a new protocol that's trying to recreate the trading pits, like recreate the person-to-person trading environment without without like the Byzantine general problem, without the speed of light problems, without the ability to kind of manipulate the microstructure. So that's kind of like, I think that's how you found me. You saw like my side pit exchange. Yeah.
Correct. Yeah. I I hit the link from your bio to just check out what you were doing and what your interests were in the space. And like you said, I found that to be very interesting because it's, to me personally, it's one of the most important, if not the most important topic in crypto that I feel gets overshadowed by people's ability to hyper focus on certain things without seeing the bigger picture of what's going on. And what's going on is that MEV seems to be a prime example of front running existing in the blockchain. And that's essentially, from my perspective, is a threat and um, a threat to neutrality and decentralization that blockchain boasts about having. Because if someone can front run your transaction or take advantage um, of their having a superior position over over other users, it it sort of takes away the potency of Bitcoin and blockchain's narrative in general, which is that it's supposed to be peer-to-peer transacting, but you have these you have these class of users essentially extracting value based on their ability to order transactions within a block, if my understanding's right.
Exactly. So think of it like if you're trying to sell a house and you find a buyer and you looking for an escrow agent to hold your money, right? So you're looking for a trusted third party. So for that particular use case, you're not going to go find a random person in Indonesia and have them be the escrow person. You're going to look for a trusted third party. When you go to a casino to play poker, you give the money to the casino because you don't trust the people at the poker table, right? So so when you're going to an exchange, like you don't want, you don't trust the miner to decide what happened in your game where you're competing with each other. You need a trusted third party, right? Like that's the utility of an exchange, is like we have a trust someone, we all trust this place, right? So that was the mistake. And what happened was the obfuscation, it's so obfuscated and so complex that you're able to like kind of manipulate the situation and make a lot of money. So that's the blockchain abstraction problem, which is why I'm attracted to Chia and um, even Cardano, like the ones that the scientific projects that are like, I'm attracted to like the real like Bramcone and the real developers who know what they're doing and saw the problem and just didn't even, they don't have it because they actually solved the problem. Varus is another one. um so that's blockchain. So the game theory of Bitcoin and blockchain is that the miners are only going to look at transaction fees. Because why? Because they have no idea about you and your coffee, or you and your deal, with your peer. There's no way they could get involved in that game. If you give them a way to get them to play the game, they're going to play the game, unless, well, not necessarily. So the people trying to solve this, they're trying to solve it scientifically with computer science, and it can only be solved game theoretically. So there's a practical and pragmatic. That's like the theme. when you go to Starbucks and you buy a cup of coffee with Bitcoin, even with Bitcoin, if you buy with dollars, as soon as you pay, how do you know you're going to get your coffee? You literally, like, every time you spend Bitcoin, you have complete trust and complete risk. Bitcoin solves only one side of the equation. How are you going to get your coffee? Well, you have to trust that they're going to make it and give it to you. And you're a sitting duck. They could just not give you your coffee. You already gave them the Bitcoin, right? We don't consider that a risk at all. The humans, we have this great ability to be like, it's so obviously never going to happen. It's never happened before. We don't even consider that a risk. That's Nash equilibrium. That's game theory. If you like started, if you actually sat down scientifically and said, of course it's not trust. Of course it's trusted. You have to trust. We don't consider that trusted. We consider that trustless. You know, you go there, you give your Bitcoin, you get your coffee. It's, you know, humans trust all day, every day. It's what we do. But it's why? Because it's the incentive structure of the world we live in. And what Satoshi did was he designed a system that makes everyone work together and have the incentive structure to create peer-to-peer money. And so what I'm doing is, and we won't know for sure it works until we see it working, is trying to design and trying to design a system where all the players are going to live in this Nash equilibrium, with the equilibrium of like a trading pit, of a place where you have price discovery. And if everyone's there for the same reason and it works that way, then even though technically, right, there's there's a couple of papers. One paper says that turns out people are willing to, they're not willing to spend money on something cheating if other people could see it, even if they can't see who it is, right? So if you could cheat and it's hidden and no one will ever know, then you have much more incentive to do it. So, and this is not like, this is just facts of how humans actually are. So at the end of the day, if we get into an equilibrium where everyone's doing what you intended them to do, then you end up solving the utility that you're solving for. So this comes back to my problem with abstractions on blockchains, where smart contracts, for example, like I used to be, I used to be really against smart contracts. Why? Because I mean, the strongest part of blockchain is the anti-fragility. Like, if there's a disaster in Bitcoin, and it actually happened, like, like Bitcoin had like a massive bug, right? And it got fixed. Guess what? When there's a massive bug and 100% of the humans are on board with fixing that bug, we don't even call it a hard fork. We don't even have any drama. We just ignore that it happened and move on, right? So when your blockchain, your token, when there's like a hack or something, but if you control the whole thing, you just fix it. That's the anti-fragility of blockchain. You could hard fork consensus and fix it, right? Because everyone's on the same page. So, I mean, like, of course it's a bug. Of course, you don't have 100 trillion Bitcoin. So it's obvious. When you're on top of a secondary chain, you can't do that. And that's why you have to have audits, and that's why you have hacks, because you shouldn't be on top of a second chain. You should have your own chain for your own utility, but it's too complex. Can't write your own blockchain. And that's where we are now. So that's like another problem with having these DAOs and these multi-sigs with millions of dollars. And if something goes wrong, there's no recourse. And that's like, you're kind of taking the strongest part of blockchain and losing it. So this is exactly another part of my design, is you build for a specific app, specific utility, and you have to control the whole process end to end.
Hmm. Yeah. It seems like there's not enough of this going around where blockchains are application specific, and um, combining them all into one world's computer, like Ethereum, it sort of prevents everyone from being on the same page about things, right?
Right. So when the DAO hack happened, right? Um, I actually was on the side of Vitalik. I was on the side of the Ethereum. I thought that um yeah, we should fork off. We should fork off the hack. It's an obvious hack, right? Um, and but I realized that it's really not part of the core. You know, yeah, I don't know if you remember the DAO hack. So I guess
I do, yeah. Yep.
20 was that 2015 or something?
I thought it was 2016, but yeah, close enough, yeah.
Right. And then so back then, if you remember, before the Ethereum Classic, I don't think there was ever a fork, right? A fork that survived. And we always said like it was almost like in the back of our minds, it was like imagine like there's no way a fork like it was like unfathomable that you're gonna fork the blockchain and have two tokens. Like that breaks everything. That like the whole idea that this token, has value now, you could just have two of them. Like it was almost we thought like the price would crash and but it didn't. And that started again, so I was wrong there. And that led to Bitcoin Cash, which led to just the natural thing, right? But it's rough because now you have all these tokens with different prices. So do we have peer-to-peer electronic cash? I don't think we do. I think we have store value.
Hmm.
Um, we don't have peer-to-peer electronic cash. If we did, the blocks would be full. And when I go to a Bitcoin conference, the price would be priced in Satoshis. It wouldn't be priced in dollars, right? Um, we used to use Bitcoin. Back in the day, everyone used Bitcoin a lot more than they do today. Now we use, even if you use Bitcoin today, it's priced in dollars, basically. Um, so we are where we are now. Bitcoin's obviously, you know, it's still going to do great, sorry, financially, because guess what? The secret is the fiat system and the TradFi system it's just as fragile, much more fragile. It's also, I mean, it's not, it's also like a game of confidence. It's a confidence game. And yeah, Bitcoin's the new financial system or crypto or DeFi or whatever you want to call it. But it's going to take generations, I think. Um, like I think one of my kids was born. Yeah, my kids were, I think, both born after Bitcoin. So yeah, they're really Bitcoin native.
Yeah. It was different when I first came in because most of the people my age, I would say, I don't know, like more than 80% of the people I talked to, were just outright not interested in Bitcoin and blockchain whatsoever. Um, it was too, it was too volatile. It was too difficult to understand. The values of immutability and decentralization weren't really appreciated on a wide scale. And I think that that changes over time as trust in traditional financial institutions goes on a decline in the long run. And people also they saw irreversible transactions as literally a bug because like you were alluding to earlier about paying for something in Bitcoin, yes, you can be sure that the Bitcoin or the Satoshis get sent from Alice to Bob, but then there's no way of crypto economically securing those off-chain dependencies, like hoping that the person actually gives you the coffee after you pay them. So there's like there were people who, like I said, most people I talked to, my close family, friends,
Yeah.
um, economists, that none of them were really interested in Bitcoin. And I guess where I was going with this is that today, so many people are growing up and are just born into a world of blockchain by default. And I like to talk, I like to mention how you start to see Bitcoin and Ethereum being traded on these apps that target young people like Robinhood.
Yeah.
So when they're trying to trade blue chip stocks, they see crypto there and it's a given to them. And once you're when something's not like an emerging narrative, but a sort of existing by default in your world, you don't spend as much time questioning it, and you just sort of accept it as something that exists and is here to stay. But that also means that um, people coming into crypto or people getting used to trading crypto aren't really concerned with the fundamental tech, the game theory, like you were talking about. Bitcoin works because of the game theory behind it,
Yeah.
and these young people aren't, they aren't scholars who are reading about Chia's accomplishments, for
Mm.
example. But go ahead.
Yeah. Yeah, you mentioned something, yeah, decentralization. So obviously I watch a lot of your stuff. I mean, we obviously have different opinions about a lot of things. So I think there's a lot of decentralization in the world, and I think that, you know, even back in the day, BitTorrent, um, decentralized, the internet's decentralized. Um, we just didn't have decentralized money. We just solved a problem of double spend prevention. And decentralization in Bitcoin, and I take a very like just simple approach, and it's kind of sad because it no longer exists, but it's the distribution of SHA-256 hash rate. That's the decentralization, right? So of course we've had decentralized peer-to-peer networks, right? We've had Byzantine fault tolerance in the 80s, but it's that hash rate and that proof of work that enabled censorship resistance of peer-to-peer cash. So now you have money that it's like a physical dollar. So when
Mhm.
you give someone a physical dollar and they go to get the product, yeah, it's the same thing as you paying someone in Bitcoin. Of course, there's a risk that they're not going to come back, right?
Right.
But so, oh, that's what I wanted to point was. So I think the people that you were talking to that weren't into it is because this notion of chargeback. So as a merchant, if you're getting paid in credit cards, you have chargeback, right? So if fraud, or right, so I guess it's the opposite. But when you're paying in Bitcoin, right, the merchant. So in my opinion, if someone's paying in Bitcoin, the merchant should send the product first, right? Because there's no chargeback risk, right? You should basically prove that you have Bitcoin and then get the product and then send the Bitcoin. Because once you send the Bitcoin, it's so much better than any fiat system ever because there's no chargeback risk, right? Um, but what happened was this craziness where people think, and this is something that's also controversial. I don't know if you're familiar with confirmations and um, zero conf Bitcoin transactions.
Yep.
So this obsession with waiting for the confirmation, like as a merchant, there's no reason you ever need to. As soon as you see that Bitcoin transaction, it's already better than any money you've ever had. Even if it never hits the blockchain, of course, people could scam you. They could scam you all the time, but they're not going to. They never do, right? So now I'm not talking about if you have a hostage situation with terrorists. Yeah, you wait 6 blocks. But if you're buying something on eBay, right? The money's as soon as you see the money, it's good. You send the product. You don't wait, right? Now, why do people wait, right? Why is everyone waiting? Why are the fees going high? It's because the wallet developers just took a shortcut. It's very complicated to deal with reorgs and to deal with zero conf. And, you know, so they took a shortcut and they said, hey, we just going to we assume that once it gets in a block, it'll never be reorged. I don't know if I'm going too technical.
No,
Yeah, so once it gets in a block, the assumption is from a developer from like, hey, we're just gonna assume it'll never reorg. So now we just have to wait till a binary gets in a block, and boom, you're good. Now we could move on, and we'll never have an issue. But guess what? One day, it will be a reorg, and it's gonna break everything. So instead, what you should do is keep track as soon as you have the money. Right? So what happens today? So if I send my grandma Bitcoin, um, and the fees are too low, right? And it never confirms and pops out. Now my grandma's never doesn't want to double spend. Like there's 100% trust. So I'm today I can't use Bitcoin if there's 100% trust because let's say she's gonna go spend Bitcoin by mistake double spends on me when she didn't want to. Why? Because her wallet is not sophisticated enough. Her wallet should be like this UTXO came from Jay. And even though it's not in the blockchain, I'd never want to spend it because right? Because we trust each other fully. But the wallets don't allow that. So the reason why everyone's waiting for confirms is because we didn't build the right tools for the people to use Bitcoin. So Bitcoin could scale infinitely. All you have to do is separate, and I would say up to 60, maybe even 90% of transactions are among people that have complete trust. Most of the time it's to your own wallet. So you should only have people like dealing with fees and getting into the next block when when there actually is some double spend risk, when you're actually doing something real, right? Gambling and stuff, or like whenever you need finality. So what happened was we went the other way, and it's a shame. And I don't want to keep ripping on Bitcoin, but it seems like the thing to do these days.
I mean, I don't blame you at all. It's like it's better to punch up than punch down. And Bitcoin's like you said, it's like the alpha of the market. So it's really important to be critical of the things that are big in the world.
What they did was they do RBF, replaced by fee. So that's the solution, which is the exact opposite of a solution. So yeah, now instead of scaling Bitcoin, now we're literally okay. So now imagine this. I don't know if Satoshi, if he's, I would say he'd be against this, but so we solved double spends, and we did that because there could only be one. The software only allows one to exist. Like the ledger cannot deal with a second spend ever. But so our software should only know about one of each double spend, whichever they see first. It's called the first seen rule, right?
Mhm.
And this default action is how everyone's been using Bitcoin since the beginning. And it was supposed to be we all come together in a decentralized community saying, hey, all we need to do is do first seen rule and we just solve money, right? It's very simple. If we all just agree that we're not going to allow double spends to happen, of course, it could still happen. A miner could double spend you. That's why, you have to wait for 6 confirmations and all that, right? But it's a game theory. So now what they did was now we have software and this is the default. And I guess it's 2024, it's a new world, so I'm not going to be like it's bad anymore, but the idea that my software is going to look at a double spend and replace it with the current spend is like so anti money. Like you should never, just like you shouldn't have MEV front running in finance and DeFi, you should never have a double spend in money. Like it should be like, no, 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 there shouldn't be ever double spend. But what we did was Lightning itself works with double spends. Like we use double spends as a tool to scale Bitcoin, right? Like that's what we're at now. So it's I'm no longer against all this stuff. I'm just saying like this is how we evolved, and it's completely different world. I mean, we're talking 10 years from 2014 to 2024. Um, and yeah, so I still think that I don't know if there's hope. Yeah, there's hope in the greater community, in the crypto community. I really want to bring together. Although I'm all Bitcoin focused now. That's because of ordinals actually, and we can get into that in a second. But I did have this plan of actually bringing communities together, especially Ethereum and Bitcoin, because those are the big ones, and trying to find like a new tribe, right? More of a positive one, based on reality and practicality, um, and coming back together instead of always fighting over weird technicalities. As long as obviously you have to differentiate between actual frauds and just bad design, right? Or like hype. Um, there's nothing wrong with people, adults, walking into a casino and playing the worst video games, video poker, whatever that they're going to get killed on if that's what they want to do and they know the odds, right? That's one thing. It's another thing when you're being manipulated. So you have to differentiate, but there's no like line in the sand, and there's no each project needs to be looked at individually. Back in 2014 or in the first ICO days, it was almost like every single project was almost a scam, right? So it became this idea that an altcoin is a scam, and then the word shitcoin came, and then the Bitcoiners stopped looking, stopped analyzing, stopped researching. But guess what? Now they restarted the entire process from 2014 all the way up to the bubble in 2017, 2018 is restarted all over again inside Bitcoin now with the ordinals. And it's the same story. And no matter how much you try to keep them down, like people are going to innovate and money's going to, unfortunately, and this probably is really aligned with your coin, it's going to inflate, or there's going to be more money. I don't know how do you say it. There's a proper word to say, not inflate, but you know, you're gonna have paper money, or you're gonna use, if there's not enough money to go around, people are gonna make money that represents the actual money to use it. Like you can't keep money down as much as you try. So I'm not like a real Australian Austrian school of economics. Like I don't really know enough about economics, but I think that, and I like I saw some of your ideas where, yeah, you need some elasticity of supply as well as demand. You need elasticity of supply, and it's going to happen no matter how much we try to stop it.
Yeah, I mean, so you basically, like you were saying, you can't really stop um supply of money from meeting demand. You can put a cap on Bitcoin supply at 21 million, but then people will just create Bitcoin derivatives to address the liquidity demands of the global economy. You even see it with the dollar, which already is has some elasticity, but because of because of who can because of the fact that central banks are the primary issuers of dollar-based debt currency, you also have a sort of like a shadow supply of dollars that are called euro dollars, I think.
Yep, the euro dollar system.
Yeah, so it's and I think something like stable coins in crypto are sort of an extension of that, like USDC and stuff like that are just addressing the liquidity demands of the dollar at a basically a greater scale because anyone can launch their own stable coin.
Right. Um, the euro, and this is something I learned from being in Bitcoin. Actually learned about the euro dollar system. It turns out, and this is some of the biggest cognitive dissonance, and I even had it. It turns out it's not really the money printers that go burr; it's the humans that go burr. Like the euro dollar system is controlled by just the decentralized people that decided that we're just gonna have banks create have ledgers, and have money that we're gonna there'll be more than exists, and we're gonna inflate it. And that's what we did, and it started what, in the 70s maybe, obviously when they went off the gold standard, right? um So yeah, the Eurodollar system is really the real currency, and I did believe that Bitcoin could do it. Um, it's I don't I, I don't know. I really don't know actually. I don't know what the answer is. I think there was this guy on Twitter. He blocked me, of course. Nash. So people think John Nash was Satoshi. I don't know if you heard that, but
A few times, but I have a hard time believing it.
yeah, he wrote this paper. He wrote this paper about like almost or some Jolly. I think his name is Jolly on Twitter, but it's about Bitcoin could be it could be the dollar back. Bitcoin could back the dollar in a sense, like fiat back. No, Bitcoin, fiat backed by Bitcoin, right? Something like that, where you could have different pockets of inflation based on the current economic systems. And it seems like crypto without the crazy parts, without the DeFi, just the non-DeFi crypto, the UTXO side of things. Seems like that's happening. Maybe it's very difficult to deal with the rate of change, and also, of course, the humans again we use the wrong denominator. So, coin market cap comes out, and I'm like, no, 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 you can't price everything in USD. No, just price everything in BTC. It'll be so much better. It would just make so much more sense because it's like, of course, your coin went up because you're denominating it in the dollar, and Bitcoin went up against the dollar. So if you denominate it, so you have to, everyone should have just denominated everything against Bitcoin, and Bitcoin would be the currency of this new thing, right? And that, but no, but now everything's denominated in dollar. Um, so now you have all these weird cross rates. So, but again, so when I started talking about what I do when I look at financial markets to get the truth is, and the honest truth is, if you look at ETH BTC, look at what is it, almost 10 years now? Look at a chart. It hasn't moved. Not only has it not moved, it's highly liquid. It's so liquid, right? And I'm not an ETH fan. Obviously, like I don't like it at all. But I would actually go as far as to say that if you want to know what the base currency is right now, I'd say there's 31 million Bitcoins in existence. So you have the 21 million Bitcoin plus the 10 million Ethereum worth of Bitcoin. That's how many, that's like the base currency of crypto right now because they're kind of interchangeable at this point in that baseline. And you see that happening in like the financial markets as much as we don't like them, at the end of the day, like it's not that different than crypto. They're battling against the SEC just like we are, right? They're humans doing bad human things just like crypto is, right? So you notice like it's Bitcoin and maybe Ethereum, right? And it's all about risk. And then there'll be Solana and nothing. And you notice I'm not even talking about any of the tech, right? So it's a shame that there's like really cool science happening with really cool ideas and cool tech, but we're talking about Solana and Ethereum. It's but it's the reality. It's just like JavaScript. I can even go one step further and show how the internet's completely broken, and there's no such thing as decentralization. The internet's completely broken. All you need to do is write a C++ program, bind to a port. Any American sitting at home, just go to basic 101 computer science, try to bind to a port and listen and tell your friend your IP address. See if they could send you a message. They can't. It doesn't work. It's so long ago since we ran out of IP addresses where each individual is not addressable. You have to go through so many centralization hops and stuff like that. So, like, you know, the, a lot of this is in theory, if we had a better internet or a different world or some distant future, yes, we could really have decentralized money, but we kind of got there for a couple of years and now we kind of like need to reinvent it. But I think it's happening in a much better place in a much better way. So although we don't have peer-to-peer money, we do have this asset that at the end of the day, as more people learn about the science behind it, I promise you it's better than anything that Wall Street's ever seen as far as technology goes. They literally gave up building, you heard it about the DTCC, the deposit trust code, right? So they gave up on technology a long time ago. And they just said, we're just going to create one big central entity that stores everyone's stocks because it's just too complicated for us to do. And that's literally how the system works today. So Bitcoin is a revelation when people actually see it. And that's why the price will keep going up, whether or not it's used for currency. Um, you know, hopefully there'll be some sort of merger, right? I don't know how. Like I even talked to the Bitcoin Cash guys. I'm like, how could we merge? How could we reverse the civil war? Right? I mean, how could we? Like you tell me, how could we?
Um, I don't know how to roll it back because aside from all of the emotional and tribal aspects to what happened, it created two or it created a new path, and now there were after that there were two paths for Bitcoin, and the people who believe it. I know you don't like the term small blockers, but I'll just say like the belief values between the people who want to stick with the BTC's block size versus increasing the block size to, I think Bitcoin Cash is at 32 megabytes now. Um, it just even if there is truth to the fact that Bitcoin, because of zero confirmation uh, and the game theory that goes into pre preventing double spends, because someone isn't going to spend probabilistically isn't going to spend an insanely enormous amount of money to double spend a cup of coffee. So there's
Right.
routes for scaling Bitcoin without having to increase the block size, but there's also people who are just stuck in their ways. And I guess it's kind of a ramble, but to get to the point, I don't see how you undo the skip. I mean the split, because it's two completely different cultures, and it's two polarized approaches on how scaling works. And I don't know who's the more technically competent group, because I'm not an engineer, I'm not a programmer, I'm not an economist. I just am interested in crypto, but I think that we have to accept that Bitcoin isn't really the asset that people are using to spend with anymore. They the community basically pivoted to allowing it to be a store of value and number go up narrative, basically.
Yeah. I I don't believe. Yeah, I still don't agree with. I know there's a group of. I know that there is the small blocker versus big blocker. I think it's insane.
Yeah,
The truth is that Bitcoin's not being used. Blocks are empty. Um, and if actually Bitcoin was being used, so it's this weird loop that we're in. If Bitcoin was being used, the block, I promise you, Bitcoin Core and the Bitcoin community would increase the block size, right?
right.
Right. The reason why it's not being used is because there's no scaling solution, right? So it's almost like it's too crowded, nobody goes there, right? And then all of a sudden, it started out where there's too much traffic, nobody drives at 5 p.m. on Friday because there's too much traffic. And then all of a sudden, nobody drives at 5 p.m. on Friday and there's no traffic, right? And right. So that's kind of what happened. Bitcoin blocks were full. And now, and the saddest part is, after the Civil War, we actually put our heads down and tried to build solutions, scaling solutions. Um, and we came up with a couple. I'm sure you've heard of Prominence and CTV and stuff like that. And there was a moment, there was a chance. Jeremy Rubin was his name. There was a shot where we get the scientists back into Bitcoin and start fixing it and scaling, and that would have completely led to 2x, for sure 2x. I would even gone to more than 2x, block size. But the block size obviously was just the band-aid. You needed other things. But it turns out that the only changes that get merged into core are funded by capitalist business models. And this comes down to, if you go all the way back to Lightning. So why is Lightning so popular? Lightning's popular because you know they convince the plebs, they convince the noobs. So instead of, so you have some people that are really technically sound, and then you have some people that they got an aha moment and they could logically think through things, right? So we got them to logically think through this concept that you have this double spend transaction that, um, as long as you're watching the chain, that you can't really lose your money, and you have watchtowers that could make sure you don't lose your money. So they consider that trustless, just like Bitcoin. So they considered Lightning Bitcoin, which is crazy. Actually, no, that's just changed in the last month or so. Like everyone's like, yeah, Lightning it's an institutional product. It's definitely not a peer-to-peer product. So they got this obsession about controlling obviously controlling your keys, right? Controlling your own keys, trust, verify, don't trust. And somehow that expanded into Lightning. And how's Lightning secured? Like, let me ask you, how is Lightning secured? Like, what's the consensus mechanism of Lightning?
I don't understand it actually. All I understand is that Lightning is just channels that you open up between individuals with a deposit, and then once you're done making a bunch of transactions between the two parties, you close the deposit and settle on the layer one. But I don't know what
Right.
the security
So
assumption.
there's no proof of work, right? What it is we basically make a double spend, and in a sense that if so if you try to, so there's a double spend, right? So if you try to cheat, and we keep updating what the current balances are, and if you take an old one and try to put it in the blockchain, you end up, if we see that happening, we end up like taking your money. So that's like the game theory of it. So what is it? You heard of proof of stake, right?
Of
So
course.
it's
Yep.
it's basically proof of stake with automatic slashing. It's slashing. That's so Lightning is secured by slashing mechanism, a proof of stake slashing mechanism. It's not proof of work. It's not Bitcoin. Bitcoin is, you don't have to be always on. Bitcoin is by default, you don't need to watch the chain and be live, right? But this one thing that they caught on to is this fact that in theory, as a non-developer, as a just like a plebeian, as a normie, I could somehow manage to control my Lightning node as well as Bitcoin, right? And since I could control it, it's basically just as good as Bitcoin. So there's this line in the sand, right? That you get in the kosher side or the not kosher side. And next thing you know, we're making changes to Bitcoin Core to fix Lightning. We're completely ignoring Bitcoin. And Lightning's great. I'm not saying it's not great. It's just one out of 50 other solutions for scaling. It's not like anything special. It's not Bitcoin. It's just, so when I say it's not Bitcoin, of course it's the Bitcoin asset, although in theory, it probably has its own price, right? Um, but things are changing. So these little things, right, where this community of, call them toxic or whatever, this like tribal community, things are starting to happen, and it's starting to like change their preconceived notions, and like ordinals is doing that, and liquid, and um back in the day, any centralized solution was completely like, frowned upon completely. Now they'd rather use a centralized solution than Ethereum. So yeah, so Lightning. So now you have these centralized. Nothing against Bill. I'm building a company, capitalistic company, is trying to make money. Um, but when you have the only changes that could happen are funded by corporations that have business models, right? And they kind of like ignore the scientists, we kind of lost. And if you go to some of the biggest conferences, you know, I guess it's not 2014 anymore, but you go to the biggest conferences, they don't even, there's not even one word on stage about like op codes or technology. That's completely lost. And you were saying that earlier. The kids, yeah, they don't even know any of this stuff exists, right? Um, so yeah, if someone opens up Robinhood, they see gold and silver, or they used to see gold and silver. Now they see Bitcoin and Ethereum. And at the end of the day, they trade very similar. Like, well, it's a little more correlated to the stock market now. But you could think of it as risk assets, pure risk assets, Bitcoin and Ethereum.
Yeah.
Um, like I don't know what happens in the Great Depression. I would think we'll see. Yeah.
Yeah. I mean, I think they're fundamentally risky assets, and they sort of depend on perpetual growth. So I don't know what happens when there's a, like you said, a Great Depression that puts downward pressure on the demand for these assets because um I guess highly speculative is the phrase that I use for crypto, just because of the abundant level of volatility that you see. Because you know, I used to I used to poke fun at Peter Schiff being so anti-Bitcoin, but
Yeah. Right.
at the same time, he's anti-Bitcoin for this very specific reason, or one of the most important reasons is that uh, gold itself is elastic, and the production cost of it is somewhat stable. So it's not supposed to moon in value over time. It's supposed to store value, um, because it's something that has, a semi-stable production cost, and it has secondary use cases. So it's not purely for speculation. And Bitcoin is just so different because it's completely inelastic, and the production cost of it is completely dependent on the basically the difficulty level in mining. The more people who are mining it, the more expensive uh the production cost of each Bitcoin gets. But um yeah, I'd say it's I, I I'm worried about where we go with BTC or ETH as money, just because of the fixed supply. Because even though uh having other coins, like you said, the real supply of Bitcoin is Bitcoin plus Ethereum's supply. Um, but these things are their own denominations and units. So you do you do have demand going into Bitcoin and Ethereum separately and dynamically. Um, so they do fundamentally have different um, values. But you did point out that if you look at the ETH and BTC chart, they are so tightly correlated that there's there's actually like a, a good argument that they are sort of the same, or part of the same cash system. But Bitcoin and Ethereum have their own futures ahead of them, and one might fail, and then that really means that the supplies aren't really one to one. Um, they're not they're not fungible. There's especially if like liquidity and scaling um, are very different between each network. I don't know. I guess it's interesting to think about money in the way that we're talking about it, where it's multiple blockchain supplies combined to define the actual
Yeah.
supply.
I
But
mean, it's not what we expected. It's not what was supposed to happen. But it's the reality. So I saw a little bit about your coin. And is the question is, can it be it has to be a big enough revolution to as big as Bitcoin was, right? In order to like become like there could be one day maybe a new coin that actually is as revolutionary as Bitcoin was. I don't know if that's not sure that's possible. I think Bitcoin already did it. And that's kind of the problem with any other token is as soon as you say this is better than Bitcoin, then it's like, okay, now we just lost the now you could just make as many now money grows on trees again, right? You can make as many as you want. So that's the only problem I see. So technically, scientifically, I think even the CBDC was central. I think they are going to I think they're going to come out with some really good technical solutions, right, for the dollar. I even think they're planning it. I mean, have you heard anything like that? You're talking to people. There's about to become a reset, right? So are they going to come
yeah,
out with some digital currency and be like, this is the new dollar?
yeah, I mean, I have friends who have been in the space, for over a decade now, and they say like the papers are there, the code is there for CBDCs, and they've been ready for this for quite a long time. They're not the people who are pushing for this and in charge of all this. They're not plebs, they're not noobs. They're actually highly intelligent people, and they're just waiting to flip the switch because the people up top, they know that liquidity is everything when it comes to money. And if you basically take what is beneficial to blockchain technology and you apply it to the dollar, you have a more fundamentally stable money that can actually expand dynamically supply wise. And that's something Bitcoin can't do. You can create derivatives of Bitcoin, but the base ass or the core BTC supply will always be fixed. And I think that there's just inherent volatility in Bitcoin. Um, but yeah, the
So when you
CBDCs,
say when you say liquidity and volatility, coming from markets, it means something different to me. So you're talking from a money liquidity. Um,
right, right,
so in theory, money should not have volatility
right,
because there's nothing to compare it against,
right.
right?
Cash or money by definition is the most liquid thing on the market.
Right. The most liquid has to be. That's right. It's the most liquid thing.
Yeah.
Cash is cash, and it's always going to be worth. So when you compare it to other currencies, yeah, it could have volatility. But in theory, if you're inside an economy, the currency of that economy has no volatility. You could have inflation or deflation, right? But there shouldn't be a price. And I think the fact that you have a price means that we're in this weird situation. So I think the CBDC proves that we won. And I don't think it's going to be dystopian. I think the CBDC is kind of like another Bitcoin altcoin. And I think, at the end of the day, just look at the Bitcoin chart. And if you want to end on a positive note, like at the end of the day, Bitcoin's at 52,047 right now. I mean, it went through its fourth or fifth 80% correction. Um, and with all the flaws and all the fact that it doesn't scale and no one's using it, right? Um, and all the derivatives around it and all the altcoins. And now, you know, I kind of feel like, we did win. It's just not what we expected to happen, right? And it's a kind of like a reset, and we'll come out ahead the next generation. But it looks like today, for the foreseeable future, we're still going to be talking about dollars when we talk about money.
Absolutely.
I don't have, I mean, you know, it is what it is, right? Um, but yeah, so that's that. I mean, if you want to talk a little about ordinals, but
Yeah, ordinals, let's talk about those in 1 second, but I just did want to comment that like having a blockchain based digital cash that's tied to the dollar, you have these advantages of the fact that it's been around long enough, it's established, it's the dollar itself is highly liquid and it's extremely stable compared to Bitcoin, even though it loses its store of value or it loses its value over time due to inflation. And
yeah.
I think that's the problem with like centralized and maybe I guess I would say politicized money where you are just trying to not only the main goal isn't to just stabilize the currency and create a stable store value unit of account medium of exchange. There's like this secondary but almost as prioritized role of stimulating the economy, stimulating job growth,
Yeah.
expanding government overreach, expanding government facilities and departments, and all this extra basically creates more and more inflation, and even like taxing for wars and stuff like that. It
Right.
it devalues the currency because of the toxic incentives that are built into the US dollar inherently. So I think it's a I genuinely think it's a good thing for monetary liquidity purposes to get something like the dollar on a blockchain. But at the same time, I think something like the coin that we focus on, which is basically Bitcoin with proportional block rewards so that the supply is elastic, protects it from inflation while also having a dynamic and expansionary policy for supply.
So I like the idea. My concern with that coin is I don't see how it's secured by proof of work. Um, if so, seems like if you're not being paid, so you're being paid proportionally for how much work you do, right? Is that what you said?
Yep. Yeah. So, like
But
one hash will always get you the same amount of coin adjusted for Moore's law.
wait, so how does it secure? How do you? So do you have blocks
Yep.
and block signer, single block signer?
Yeah.
But so every block, only one miner gets paid.
Um, yeah. Yeah. There's
So I think you have, I mean, I think you have weak subjectivity, just like Ethereum does. I think there's a long range attack vector. Um, Somebody could rewrite the chain, going all the way back, I think. Um, so because the hash rate could be really low for a long time. So I guess the question is, what's your longest chain rule? I haven't read the white paper. Who wrote your coin?
his name's Carol Lichachowski. Like he goes by Licho on Telegram. I think like if you want to talk security, I'm much more about uh defining how the importance of supply mechanics
Okay, yeah.
in
No, I
blockchain.
like it.
He's the security guy, and I may even be misrepresenting some critical aspects of it because the way I understand it is that my mining doesn't affect your mining. We're not competing for the same coins in each block. So
Right.
actually, if like, yeah, if I put in like, $100 of hash power and you put in $100 of hash power, we'd both get $100 worth of coin.
Right. Right. I picked up on that, which means, right. So, which means that I would just say this. I would say it could be in a Bitcoin world, and like it's even hard for me to even. I'm still living in a pre-Bitcoin world, but in a 10 years of Bitcoin world, yeah, there's a different type of game theory for a coin that could survive, right? Because right, we'll never experience 2010 to 2014 ever again, right? There'll never be no ASICs, there'll never be no, there'll never be a pure decentralized moment of hash rate ever. It
Right.
can't happen, right? So I think so. Like I was saying earlier, a new technology, new innovation could happen in this new world we're in, a new game theory, a new Nash equilibrium based on the reality we live in. And my kid's 14. He grew up. He was born into Bitcoin, so he's in a completely different reality than we were in. And I think at the end of the day, this is a tool for humans, right? Gold, like money is a tool for humans to do things. It's not, it's literally just a tool. I think people forget like it's a tool. And if you need more tools, you make more tools, right? The humans are going to find a way to do it. And getting back to your concern with the CBDC, and I want to make a separation between the US dollar and the euro dollar. Um, the problem with the US dollar is the federal treasury borrowing, you know, deficit spending. That's the inflationary problem. The decentralized euro dollar system, if that was tokenized
Mhm.
and if it wasn't controlled by the United States, even though it's called the United States dollar, the United States dollar just happens to be the global currency. It's nothing to do with the US. It's kind of like the new gold, right?
Mhm.
It's the you know so the US dollar has an advantage, of course. I mean, we took advantage of the US United States of America took advantage of the fact that it's their currency that they can, right, that the whole world uses. And we got it to the point where we're stuck right at this moment in time. Inflation's going back up, interest rates are high, and we're about to explode the whole thing. Like, we can't even go higher. At some point the Federal Reserve goes bankrupt here, right? So the reset is coming. It's a question of, is it going to be a deflationary reset or is it going to be an inflationary reset? I'm more afraid of the inflationary reset, to be honest with you. But it could be that Bitcoin fixes this, or crypto, right? Like, it could be that the CBDC merging with the euro dollar, and somehow, I don't know how we're going to keep the politicians away from it, but maybe another generation. But I actually would, I don't want to say it, but I kind of would rather a deflationary event for 10 years than a inflationary event 10 years before we actually come up with a solution. I know it sounds depressing.
I mean, I, for the most part, I agree. There's trade-offs, between each, and I just think of people either most people fall into one or two camps where like inflationism is good or deflationism is good. And I think it's more about the trade-offs and the incentives that are at play, because when you have inflation, you have people losing their store value, so it
Yeah.
discourages saving and encourages spending. And it also puts the people who have the money first, the people who are in charge of creating the money, at an advantage, because then they spend that new money. I'm sure you've heard of the Cantillon effect. They
A
spend
little bit.
they
Oh, they
spend
spend
that.
the bad money first, right? Or
That's Gresham's law.
oh,
The Cantillon effect is basically that the people who are up at the top in a top-down system, they're getting the newly minted money first. So through their spending of it and it going trickling like down to the bottom of the economy, is the process of it inflating the base supply. So basically, by the time that you have it, your money has been
Right.
diluted,
I see. I see.
puts them at an advantage. So there's just toxic incentives with inflation and deflation. I always see it as I tell people it's just the inverted, it's just like the bizarro Superman version of inflation. It's just the exact opposite, where
Right.
you have rapid valuation increase over time. It encourages saving over spending. And that it just, when you encourage one over the other, you're really just, you're prioritizing certain types of users over other types of users. And that's why I try to promote an elastic currency that isn't inflationary or deflationary in essence.
So you're saying that your current what's your currency called?
Ergon.
When you say yours, I mean your tribe or
Yeah, yeah, yeah. We're a bunch of
Ergon? Ergon, you're saying it's neither deflationary. Okay, I'll have to look into it. Neither deflationary or inflationary. Um,
yes.
Interesting. That's a
It's
fork of Bitcoin Cash?
it is. Yep. Yeah.
Okay. What?
Some OG Bitcoin Cash devs, they did it back in 2021, and I discovered it only this year, but I had to make a podcast about it and try to make a splash, and not shove it down people's throats or be a shill, but just be present in the space. So when these conversations do arise, I can propose an alternative to people to look into so that they don't feel like they have to go with inflation or deflation. Um,
What
and
is Ergon? Where did Ergon stand for? What you know what it
uh,
means?
yeah, yeah, it's the word for work in Roman. So that's where ergonomics, the term ergonomics comes from. It's workplace efficiency is the meaning of it, but ergon is the Roman word for work or energy.
Hey, maybe in like, I don't know, 7 years from now, Ergon we merge into Bitcoin Core and we solve the problem of
Yeah,
unit of account and
yeah,
means of exchange. Like, crazier things ever happened. I could see, there's I actually heard this idea before. You know, not from a fork, not from a its own token, but from like as a Bitcoin scaling solution.
yeah,
So no, it's interesting, and I think that it's, like I said, the pushback's going to be from a perspective of pre-Bitcoin, but in a post-Bitcoin world, like I think it's something that could be looked at. Very interesting.
yeah.
The yeah,
Sorry, but
nothing.
I know how you say you're always looking for new tribes, and you're more than welcome to join the chat because we like it when people who have like a moderate level of interest, but also many, many questions because it's so early. We want people to try to poke holes into it so we can fix any security issues or incentive incompatibilities early on. So it's not a global so it's not as like Bitcoin to me, I don't know if I'm right or not about this, but I feel like it just got too big too fast, and we rolled out something that wasn't really complete.
Well, yeah, I mean Satoshi, yeah, coded it himself. The thing is, I don't buy. So I love, yeah, I like the technology. Like I like Chia, I like Ferris. I've never owned any token ever,
Mm.
um, because I understand financial markets really well, and I understand liquidity, and I understand it's all Bitcoin. So I'm just going to hold Bitcoin. However, I do buy the Ethereum, and I use the Ethereum to make more Bitcoin for myself when the FUD and the plebs don't understand what they're holding. And when Bitcoin starts popping, you'll see this. And if you want to make extra Bitcoin, anyone who's listening, when Bitcoin starts going crazy, like up 20%, 30%, right? All of a sudden, ETH BTC starts dropping. And what's happening is that people don't realize that they're holding Bitcoin. They think they're not holding Bitcoin. So they sell ETH USD, which is mostly Bitcoin. They're selling Bitcoin and then they're buying Bitcoin with the dollars BTC USD. So what happens is ETH BTC starts dropping until those people are done, and then the market comes back, and next thing you know, there's a moment where Ethereum shoots up 10-20%, and all you got to do is try to catch that bottom of ETH BTC, and then you end up go back into Bitcoin, and you end up with yield on Bitcoin. So that's the only time I ever touch any other coin. However, I would love to, yeah, get involved in the community. I just, yeah, I don't like, as far as price goes. Yeah, I don't think that I would buy coins. Although, like, I missed CAS, CAS, KAS. That was another one that I looked at really early. Aspa, maybe.
Yeah, Casp, the
Yeah.
digital silver from Unity.
Yeah, I looked at that when it was like, 1,000% ago and stuff. But maybe I should speculate more, but I don't. But I'd definitely be interested. And I'm actually launching an exchange, a Bitcoin side chain
Yes, let's talk about that.
out a token. So yeah, it's not a token. So yeah, so by trying, story goes like this. 2015, I was working with people like, I don't know if you remember BitShares.
Yeah.
So before Ethereum, like I said, everyone was trying to figure out what could we do with this technology, and I came up with this. So you're a football guy, oh dude, this is awesome. So I created fantasy football blockchain. So I had to code the whole thing from scratch, right? This is before Ethereum. Back in the day, you had to code your own blockchain, and the theory was that everyone knows the score, everyone knows everyone who plays in the NFL, so we could just all enter that information ourselves, and we don't need Oracle. And then I created a futures exchange on individual NFL players. So Tom Brady, week 12, you know, how many points is he going to score? So I actually built a futures exchange, and I ran into the problem of MEV. It wasn't called MEV back then, it was called front running. I was like, shit, this can't work. It's impossible. And so that's what led to where I am now. I started fixing this problem, you know, and it turns out if you solve MEV, you actually solve HFT. And we do that by pausing time. So we just say, hey guys, so the way you solve things in blockchain is you pause time, you delay finality. It's called delayed finality.
Mhm.
Right? You delay finality, and you have fully transparent. So full transparency and delayed finality solves the problem of Byzantine generals. Full transparency and delayed finality. Bitcoin did 10 minutes, we do 1 second. So what we do is we say that um, we come to consensus on the entire mempool, which is much harder than it seems, but we're not in blockchain, which is good. We're in our own network. We're creating our own Nash equilibrium for professional traders, trade in a trading pit called Sidepit. And by pausing time for a whole second, we put that second up for auction. We're auctioning off the ordering of events. And we believe the result is going to be um, a Nash equilibrium where nobody attempts the front run because it's part of the consensus. Everyone could front run it. It's like you can't insert new transactions in. That's the consensus part. And then the second part is you have an auction. And what this does is it removes HFT, moves MEV, moves flash crashes, right? And it's so what we did was we concentrated on our utility, which is price discovery. So we have a decentralized price discovery mechanism. However, the only way you could get that is if you have a trusted party holding on to the money. So the reason why DEX was broken, and actually in 2010, the biggest idea was like, we solved money, now we have to solve exchange. That was the thing. Everyone was like, we have to solve exchange. And they went, instead of solving exchange, they solved Mount Gox. They solved the exchange going bankrupt instead of solving what the purpose of the exchange. The exchange is a trusted place that provides a place for people to gamble. And you don't trust the people you're gambling with, you trust the exchange. That's literally the point. So if you stop, instead of trying to solve for settlement on chain, you solve for price discovery on chain. Now there's no front running. And it becomes like the Starbucks where it's so obviously the exchange is not going to run away with your money because it's completely transparent and open, right? It's not like we don't know where the exchange's money is, and every day if you wanted to. So in our exchange, so that's technically, um, it's a Bitcoin side chain. We are trading US dollar forwards. So that means, I'm familiar with, like, let's just take the soybean trading pits. There's no soybeans in the soybean trading pits. So in our side pit, there's no dollars in the dollar trading pit. It's just Bitcoin. So Bitcoin is the currency. We're gambling on the price on the dollar with Bitcoin, right? So now if you own Bitcoin and you want to hedge the price, because guess what? You know, the Bitcoin conference is priced in dollars, right? So if the price of Bitcoin drops, you're not going to be able to buy a ticket. So you need to hedge your price, right? So what you do is you buy the dollar contract with your Bitcoin, and you do that by signing a transaction with your Bitcoin, putting it into this new consensus, and then it's at that point it's deterministic. We have a decentralized limit order book, and at the end of every day, right, it's kind of like golf. Everyone scores everyone's tickets, and everyone knows all the P&L, and then you could go home to your wallet if you want. Now, this is all great. However, back before ordinals, there was no way anyone could use their Bitcoin to do something like this, right? Because you have to, to trade in Sidepit, you have to sign transactions maybe multiple times a second, right? If you're running a bot, right? So you can't, take out your, can't take out your thing and connect it, your ledger and do a Bitcoin transaction. It takes 45 seconds. So, so you had to use something like Ethereum and MetaMask for that. So what we're doing is Ordinals enables Bitcoiners now to actually use Bitcoin for other things, right? In a secondary layer too, in a user in a way that users could do it, like non-technical users could do it. So what we're doing is we're minting trading jackets. So to be a member of Sidepit, you need to own a ordinal jacket, which is a virtual picture, right? Um, we're just gonna say you're gonna get one, and we're gonna have like a reveal in the future. Um, so now you have what it is literally just a Bitcoin address that happens to like generate a picture of your jacket, which is cool and everything for art. But what it also does is it turns your UTXO into an account. So that is the account.
Mm.
So now so now you have a way in and out of the exchange. And once you're in there, you could do all your trading, and you come out and you're back to account. So that's what we're launching, called Sidepit for the halvening. It's really made for professional traders and institutions in the future. But what you get for everybody else, you get the price of Bitcoin. So what is the price of Bitcoin? It's going to be coming out of the Sidepit because we have a transparent, decentralized price discovery. So anytime you're doing an atomic swap or anytime you're doing anything in DeFi, now you don't have to use Chainlink or Coinbase or CME. You could just run this decentralized protocol to get the price, and that's like what really the greater community could get out of it is the price of Bitcoin if they're not like actual professional traders. So we're not like 100x, we're not, perpetuals and all that. It's not for degenerate gamblers. It's for professionals that are trying to hedge their risk. Yeah.
That's awesome. So you actually are creating, just to reiterate what you're saying, you're creating on-chain price discoverability that isn't dependent on oracles or trusted third parties.
Right. That's the first
Um,
step. Right.
and do you are you skeptical of Chainlink being used for so many things?
I know. Listen, I've seen it. I know, like, when there's a lot of money to be made, at the end of the day, you have perpetual futures that are going to hit a binary level that's going to generate a ton of, like, what do they call it? It's going to generate a bunch of margin calls, right? If it hits this certain level. So it's one thing if we're talking Bitcoin. If we're talking some random coin and you have some oracle putting it into some chain link, right? I'm 100% sure it's manipulated. I mean, it's not even manipulated. Okay. 1,000 times a second, every single stock in the entire country is manipulated. If you want to call HFT manipulation, maybe that people don't like to call that, but MEV, we could basically call it manipulation, even though it's a penny, right?
Mhm.
So now I think there was an incident once where there was going to be like a perpetual that hit and people were stopping it. Like, this is what's going on. It's what do they call it? The dark forest, the MEV. The end of the day, this entire system was not meant for DeFi. It was meant, and the problem is, so the regulatory is not, so the Nash Ethereum is completely messed up because the regulatory regime we're in says that if you're on chain, we're not going to arrest you. But if you try to do this as a centralized entity, it's an illegal security token offering, right? And you have to register and get all these things. So now it's like timeout. So you're making everyone use marked cards in their poker room because if they try to actually make real cards, you're gonna find them. So you literally the by using the 1933 laws, we're actually creating a much worse exchange environment, worse price discovery. And the craziest part is that the overarching purpose of the SEC, they have a fiduciary responsibility for fair markets. And they're actually creating the exact opposite. So you had one thing, you had HFT, now you have MEV, it's even worse. So we're coming in and saying that, you know, we're going after the fiduciary responsibility of making markets fair. And turns out that we're actually are compliant as well. So since we're kind of on chain, since there's no way in and out of our exchange, the only way in and out is from your jacket.
Mhm.
So there's no possibility of terrorist funding. There's no possibility of money laundering. It's literally almost like you're getting your change back. Like you're locking up your coins for the day. You're walking into the pit and trading, and when you walk out, you get your money back. So it's not actually going anywhere. And the best part about it is we don't charge commissions. Not only don't we charge commissions, we give you rebates.
Hmm.
So there's like a taker used to be like maker rebates and taker fees. We're doing taker rebates and maker fees. So as a market taker, as a pleb that just wants to hedge and send the market order, you get paid. And when you think about it, how's that possible? Because just like Robinhood, zero commissions is not really zero commissions, right? We're paying you a little bit because you're still losing, and you're still losing out because you're paying the market maker for liquidity. So that's the theory of exchange, is that you have speculators get paid by the hedgers for the liquidity. If you want to become a speculator, you have to study and become a professional trader, know what you're doing, and then you can get paid for liquidity. But if you just have risk, or you want to hedge your risk, you have to pay the speculators. Although it looks like you're getting paid, but at the end of the day, you're getting a bad price. Not a bad price. You're getting, at the end of the day, it's an exchange. Everyone's competing with each other, right? Where this is not like some kumbaya thing. It's like the real world, right? It's like, it's a game. It's a poker game, right?
Yes. Yeah. So, um, you basically, I just wanted to go back to the beginning of the explanation. You basically are gonna auction off at every 1 second. Is that what you said? And how does that for a like a pleb or like maybe as an Eli 5, how does that create the new equilibrium where people aren't front running?
Okay, so first of all, the plebs were never gonna do any of this. The plebs are just gonna look like an exchange with a price, right? And instead of what you look at today is you see flashing orders, right? There's not going to be any flashing. Everything's going to be real and it's not going to go anywhere. So the flashing happens because of, well, the flashing happens in centralized exchanges because of the speed of light. Um, so by going decentralized, we stop the flashing, right? So you stop the flash crashes and everything is kind of like sitting there. So it's higher spreads, but it's real bids and asks, like, real bids and asks. But how do we stop the front running, right? So there's two types of MEV. The first one is injecting new orders. So like you think of rock, paper, scissors, right? Um, someone sees it and then they could inject their order in there, right? So rock, paper, scissors is not the greatest thing, but basically the miner sees what you're doing and then they put their orders in to front run you, right? So what we do is we gather all the orders in a second, and this happens not on a blockchain, right? That's the difference. It happens in we're using XRP or like Stellar type of Byzantine UNL. It's a game theoretical thing. I could start from the beginning. So when you start out your node, you choose who you're connecting to,
Mhm.
right? You choose who you're connecting to. So and then you come to consensus every second on the mempool, which means we now know all the orders that exist, all the buys, all the sells, all the cancels. We all agree that this exists. So no one can insert anything. That's step number one. Okay. Now the question is, what order did they happen in? Does anyone know? Not only does anyone know, there's no in the reality of our world that we live in, there is no answer to that. Right. The speed of light determines the relativity determines that not only does nobody know what happened first, there is no definition of first, unless, right, because of the speed of light and relativity. So we just admit that we don't know what happened first, right? We don't know. Did you say buy or did I say cancel? We can't tell, right? Can't tell which happened first. Did you hit your button first? Did I hit my button first? Where was your button? How far away from it? Right? Speed of light. So we don't know. So we just admit that we don't know. We auction it off. So let's say there's 1,000 transactions. How many permutations are there? Um, n n bang divided by n minus one or something, right? So if those 1,000 it could be, we don't know the ordering of events, but it could be any of those orderings, infinite orderings, right? I don't know what the answer to that is, but it could be like 1, 2, 3, 4, 1, 2, 3, 5, 4, right? You go through all the different permutations and you pick a permutation and you say how much you want to pay for that permutation. It
Mm.
turns out, and this only works because we're app specific, because we're only doing this for one application, and the application is a continuous limit order book. So most of the time, it doesn't really matter what the ordering of event is because the price hasn't changed in that 1 second. It doesn't really matter. And not only does it not matter how much you're going to pay, you're not going to pay more than, why would you even pay anything if the price hasn't moved, right? You're not going to make any money. It's not like you're gambling on, there's nothing binary happening. You're not generating liquidations. You're not betting on a sports game. It's like it's very esoteric, high frequency trading type of stuff. We're basically enabling high frequency trading without the latency arbitrage. So what we're doing is we're giving a bone to the sophisticated bots to do everything they're good at doing, creating liquidity, but not manipulate anything. And if they want to fight it over the last little bits, they could fight it over by an auction. And what this does is enable you as an end user just to send market orders. And what does a market order mean? It means I want the free market to price my order, right? People are afraid today of sending market orders because they think that it means that you're going to be manipulated by the market. No, the market order means the market's going to give you the price that you should get, right? That's the purpose of the market. So we're removing that fear, right? To say that this is the price you're going to get. Now, the one thing that the one added thing that we benefit here is that flash crashes do happen. You ever see those?
Yeah.
Okay, so Bitcoin goes from 50,000 down to like 37,000, back up to 50 in one tick, right? Instantly. What happens when that happens?
Uh,
Everyone's like, I wanted to buy it for 37. I want to buy, I'll pay 47, right? That's not fair. How could I get it? It's too late. Once the flash crash happens, you can't buy it anymore. It's too late. You missed it. So we're going to have a BTFD pool. So in case a flash crash does happen in our exchange, right? If it does happen, let's say it happens twice a year. Um, if it does happen, we're going to have a pool of pleb liquidity, and this is going to actually have to be KYC for sure. It's called BTFD, and we're going to be sitting there waiting for the flash crash, and we're gonna go back in time 1 second, win the auction, insert our transactions in. So you do have, you could basically, you see the flash crash happening. This is what you're gonna say as a pleb. You're gonna say, I'm willing to buy. I'm a Bitcoin buyer of last resort. I'm willing to buy Bitcoin at $37,000 if it's down 5% in the last second. That's the order type. So we add to the limit. We add a percentage instantaneous drop. So at any moment in time, like right now, we're at 52,000. I'm willing to pay. I'm willing to buy Bitcoin. I'm willing to leverage my Bitcoin to buy more Bitcoin at like 47,000 or 46,000, right? If it ever happens. And if it does, right? So then it's basically, if it does happen, why does it happen? By the way, it happens because the bots, Wall Street bots, are not buyers of last resort. They're designed with the understanding that at any moment this asset could go to zero. Apple could file bankruptcy, right? A war could happen. Crude oil went down negative $43. Like, so they pull all the bids. And if you have buyers of last resort, you come in and buy that up. So that's the pleb thing where you leverage your Bitcoin to buy more Bitcoin at a discount. And you do that by going back in time 1 second. And this creates, that's the final piece of the puzzle. This creates the loop, right? We call it a virtuous cycle of alpha creates liquidity, liquidity creates alpha. And we want the side pit to be the place where price is discovered. And it doesn't mean it's going to be good. It doesn't mean it's not going to be volatile. It just means it's going to be no execution risk. It's just going to be the fair market price. And that doesn't mean it's value either. Okay, let's not forget that. Price has nothing to do with value. Price has to do with liquidity, right? So even though Bitcoin may be valued at $1 million, right? Still trading at 52,100. That's the price, right? So we're just going to give you the fair price. Um, and it's not, you're not going to get rich. You're not going to get 100x. You're not going to get rich off of it. I mean, you could, you just hodl, right? Um, and the reason why it works is because there's um, at the end of the day, if there is a fork, if people do have a thing, then you go to the fact that there is some monitor that's holding the Bitcoin for the day that has to divvy it out, and we deal with it then. And that's the game theory. The game theory is that knowing that there is everyone's eyes on it and there is someone holding the bag, knowing all that, we're only going to do what we're going to do as much as we could to make as much money as we could, but we're not going to go over the top and cause, do things like, DDoS attacks and stuff like that, like things that are obviously egregious. Like if someone, if someone cuts the cord in the middle of like of the Atlantic Ocean and like the market and it causes like a crash to zero, we're just going to ignore it. And they know that. So they're not going to cut the cord. And that's the difference between finality on a smart contract where you have no control of the underlying and finality when there is some theoretical, you know, human control when something really goes wrong. And that actually creates the Nash equilibrium like you are in Starbucks, where in theory, yeah, they could shut down the corporation and run away with your coffee, but they've never done it and they never will do it. So we're the place for price. Sidepit is the price discovery of Bitcoin, and it enables all the dexes to work much better in the atomic swaps. So we're not even competing with anyone. We're only competing with latency arbitrage. We're competing with manipulation of the speed of light.
I like it.
Yeah.
Definitely like it a lot. I wanna I wanna think about it a lot more. My first time diving deep into something, and you did describe it full circle. So I got a good idea of what its value proposition is and how it works. Um, but I'd love to see more discussion around it so I can um so I can understand it even more deeply, because like I said, I don't really like front running. Uh it I mean I'm guessing there's some like inherent like inevitable front running in certain things, but you you are doing something that's application specific to like high frequency trading. So
So
that's how you avoid it.
same way cash, when the way cash works is you have to physically hand over the cash and the other person hands over the goods, and Bitcoin made it digital cash, and but it's recreating the physical cash, right?
Mhm.
We're creating the physical trading pit where there's no speed of light and there's no asynchronous communication. So that's the same idea. We're recreating the physicalness through this delayed finality. And that's so it's almost like, we're creating like a room where the old the OG degens come to gamble, and at the end of the day, this enables you as a Bitcoiner to hedge your risk in case, let's say Bitcoin goes to $360,000 in the next 2 months, and you like, fuck, okay, I just want to, let me lock in the profit, right? So you could lock it in, and then, right, you lock in at 350. You do that by buying the dollar. And then let's say Bitcoin drops down to 150. Let's say you started with one Bitcoin, now you have two Bitcoin. So that's it. Now you have two Bitcoin. So there's no, it's not like the type of exchange where the word exchange has been hijacked. It's not, it's, you don't go buy the exchange, you don't go buy a gallon of orange juice. It's the exchange where you hedge, millions of acres of oranges it's the lowest level of price. It's not what people are used to when you go to Coinbase and go home with your thing. It's the fundamental low underlying thing for that. So that's why we're only able to do it, is because we're focused on the utility explicitly, and that's the abstractions is what breaks the rest of them. And that's what I did for the fantasy thing. What I'm doing for this, and we won't know for sure until it's live. Um, and this will hopefully bring some more interest into technology again, like Bitcoin did. Like you could actually write code that does something with a decentralized, story, um, you know, and it could actually solve a problem, just like, you know, Bitcoin and BitTorrent and the internet itself, right?
Yeah. Uh, and I really like the that analogy that you drew to the physicality of cash that Bitcoin offers, and comparing it to this being like a physical trading pit where everyone's in the same room and there's no uh there's no relativity delay between people. Um,
Right.
and that to me is like an actual innovation and an actual like revolution in like financial technology.
Yeah.
So I just I'm more interested in what you're working on than I've been in most things. I'd say it's in like the top 10 most interesting things I've heard about in crypto.
Thank you. Thank you. It's been a long time coming. Yeah.
Yeah. Um, but you know, I really do appreciate you coming on and explaining all this to me because I think if I don't think I would have understood it the way you described it if I had just read the white paper. Uh,
Yeah.
I'm kind of a I'm kind of a normie, you know. I just try to understand these things, but you've got like a really strong background.
Yeah, if the one point, if you could understand, if everybody listening to this, if everyone could understand why they flash their orders, if you could actually understand why the orders are flashing nonstop, if you actually understand that in a scientific low level, then you'll be like, aha, wow, that's insane, right? So
Yeah.
they flash their orders. They try to go faster than the speed of light.
Mhm.
A negative action. The only way you go faster than the speed of light is make a negative action. So that's how they fight back against the high frequency bots. And it's just like crypto. And when this started in 1997, it's created this insanity that ended where we are today with the Flash Boys, and the same thing happening in crypto. So again, it's people taking advantage of technology. And let's see if the world could actually, you know, adopt technology that actually helps a little bit for once, um, and that's really what Bitcoin did. And that's why that's why I was so drawn to it when I first saw it. That was like almost what 50, I
Yeah.
don't know how 15 years ago. God damn.
Yeah. I mean, personally, I was in it for the peer-to-peer cash and decentralization, but and then I started getting into DeFi, but centralization, Oracle risk and MEV, all these problems sort of made me lose interest in those things.
Yeah, it's true. I did hear recently that things are starting to start working out again. I'm starting in my old age. I have open mind. I have open mind again. So maybe AMMs do have a future, and hopefully Sidepit fixes that as well. But
Mhm.
there are new things happening, and yeah, and hopefully, you know what I'm gonna do? I'm gonna make a ton of money, and I'm gonna hire all the. We're gonna fund, like I said earlier, you need a freaking business model in order to fund the right shit. In order to get shit into Bitcoin, so we're gonna fund the right shit and fix Bitcoin. So yeah, 10 years. 10 years from now, we will somehow have merged all the communities and created a new tribe. That's
I believe it. Earlier I said I wasn't sure how you would undo the splitting of the Bitcoin and Bitcoin Cash community, but that's sort of like a short-term outlook. I think in the long horizon of something like 10 years, the wounds heal and
yeah,
people get over it. Tr like the strength of tribalism can fade over time as well. And well, I'm on your side where I want to see unification in this space. Um,
right,
that just takes a lot of time because people operate in different speeds. Some people take 10 years to reach a revelation, and some people are much more fluid and instantaneous when it comes to realizing
right.
real solutions. Um, but it's been like I think it's been 2 hours. So
Oh, really? Oh, time flies.
I know it keeps happening when I have good guests on. I lose track of time. But the thing is there's lots of notes that I ended up taking about the myth of decentralization, the tendency for things to centralize, such as blockchain and the internet, uh,
Yeah.
finality, your comments on Chia, some comments on Bitcoin versus gold. I just had a lot of things that I was
Oh,
taking
cool.
notes on as we talked, and basically I'm hoping that maybe you can come on another time and we can break some of those things down.
Yeah, what is this like your tenth podcast?
Yeah,
So you're gonna become like yeah, I'll come in like 1,000. You're gonna become huge, man. You're gonna be
I hope to make 1,000. I don't know if I'll get huge, but I definitely hope to make 1,000 podcasts.
no, that's awesome. No, I appreciate it. And let's just keep you get so far I knew a bunch of the guests you brought on, and it's people that I haven't seen in a while, and flashbacks. So yeah, let's bring it all around.
Yeah.
Really enjoy.
Yeah, some of the people that I'm planning on having on like don't really agree with the people that I've already had on.
Oh
Like
yeah. I,
but that's what I want. I want bringing everyone to the table.
yeah.
Um, so even BSV people, they're welcome onto the show.
Oof. Yeah.
And
As
I've
long
been
as
I've been
Yeah, I'm not
warned not to
saying
do
anything
that.
negative. There's only one thing I don't like in crypto, but it's fine.
Yeah.
Uh, yeah, it's Hex. Shouldn't say it, but I feel like Hex is pretty bad. Other
Oh,
than yeah,
yeah. I mean, I have my limits too. I don't really. I'm not a. I don't even think I would have hex on. I mean, I don't want to say that, but I mean, I don't know what value they would add to the
well,
conversation.
you wouldn't have one coin on, right? Or you wouldn't have BitConnect on. Like there are certain. I think we do need to call out the frauds, and there's not. There used to be a lot of frauds, and now there's not many, but there is one, and we should. And these people are the most vulnerable, so we shouldn't let them get away with it. The hex people, it's just not right. But other than that, I think the rest of it is just whether it's stupid, whether it's not stupid. I mean, it's adults doing stupid things with their money or with their JPEGs or whatever, right? Like, um, it's not like the scams that the 1933 laws were based on. We need new laws, and we need a new look at things from a new way.
Yeah. Um, I think there's, like you said, there's not as much fraud, but there's still fraud, and
Yes, but the fraud it's orthogonal to the technology that's being used. There's fraud in all technology, and it's nothing. There's no you can't say this technology means it's fraud, right? Like everything needs to be looked at from its own. You know,
I mean, there's still plenty of people who say Bitcoin is fraud.
yeah, but that they don't really mean it. I mean, it doesn't matter. You just have to look. You just look at the price and look at the liquidity. It's impossible. There's never been a fraud. If it was tulips, it couldn't have done 80%. It couldn't. It's impossible. It's a guaranteed not. You just have to. The markets. The one thing that's not a fraud is the markets. Well, if you say that all the markets are manipulated, okay.
Yeah. Yeah. Well, tulips themselves had like a limited amount of potential utility, whereas like something like Bitcoin is basically based on the number of users that are connected through the network. So
Right.
uh, it's not a good comparison. I never thought it was a really good comparison, but um yeah. So oh, the network effects, sorry, that's what I was trying to say.
The network effect. Yeah. I don't know. I think that I everyone. It's funny. Everyone has picked the same problem with Bitcoin, and this everyone, even the Bitcoiners, like everyone has picked on this tribe that this toxic thing that happened, and they're not really Bitcoin. Like they're not. We're Bitcoin. Okay. Ergon is Bitcoin. Like that's the truth.
Yeah. Yeah, I agree. I don't like toxicity. I mean, I think nobody's perfect. You know, I have my bad days and all that, but there are groups that are just inherently and perpetually pushing toxicity in the world, and they're kind of working against humanity.
Social media.
Yeah.
So if the yeah, I would love it if we could figure out how to go back to IRL. I
Mhm.
mean, I'm a Gen Xer, so I'm not used to like texting, even texting, right? Like what happened to the phone call? What happened to getting on an airplane? And meeting people. Um, but yeah, I sound like the old guy now. So
No, I mean, I never used social media that much growing up. Like I didn't use Facebook, I didn't use Instagram, I didn't use this or that. I didn't use anything aside from texting. And I think it just like there were some benefits to not being part of the insanity, but at the same time I was losing networking
yeah,
opportunities. And now I just use it with caution, like you would use like I don't know a loaded gun with caution. Like you have to be cognizant of like the problems with social media if you're going to use it at all.
yeah, we met on Twitter, so I met a lot of people on Twitter.
Yeah, yeah, there's a silver lining to it. I mean, that's what my job is right now is to just network um for a blockchain company. So I kind of need to use Twitter. But yeah, it is what it is. I've grown less spiteful of it. I'll say that, just because I see the good and the bad in it, whereas I used to just think it was all.
So who do you have on next?
Um, Next I have a friend, Emmanuel Lai, who's just like a close friend of mine. So he's not really like famous in the blockchain space. He just works in AI and automation and stuff.
Cool.
Um, and he talks a lot about blockchain for free market solutions. So and then I'm having a few other people from Nervos Network on. I'm actually having one of the original Ethereum advisors on, Steven Narioff. I think that's how you say his name.
Okay, very cool.
Yeah,
I,
but
I I could
if
give
you,
you some. I could give you some people I'd love to have you to have
I
on.
was gonna ask, yeah, if you have any like people
They're
to
all blocked. They all blocked me on Twitter, so I have to. I'll give you.
yeah, just let me know who to, and I'll reach out to them all.
Yeah, for sure. Awesome. No, this was great. I love it.
Yeah. Till next time. I hope you come on again. I really do. And maybe with the Ergon people, so you
Okay.
could talk to the founder about it and do a multi-person thing at some point. Or it doesn't even have to be a podcast. If you want to hop on call with us and ask us about the protocol,
Yeah, yeah, yeah. I mean, I guess it's the bet. You're right. Instead of me having to read all the papers and compile the code and run everything, I could just pick his brain and I'll have like 2 weeks of work done, right? So much better, right?
yeah,
Great
yeah.
idea.
I'll let you know. I'll let you know what time he has available, and
Yeah, I'd
figure
love
it
it.
out. All right.
Awesome.
All right. Thank you so much for
All
coming
right.
on.
Thank
Appreciate
you, William.
Yeah,
Take it
thank
easy.
you so much. You too. Thanks.
Okay, bye-bye.